Welcome back to Dummy Boy Finance. I'm Dummy Boy, and in this video, I want to help you understand what's going on with WorkHorse and what the best case scenario for the retail investor is. So the reason why I got into WorkHorse and the reason why I recommended WorkHorse to other investors was because of its high short interest. And so in the environment that we're in right now, we're seeing a lot of hedge funds versus retail investors. And so with the WorkHorse, I want to explain to you what that all means. So we're looking at WorkHorse that's at 50% short interest. What exactly does that mean? There's a lot of big hedge funds out there with lots of money that borrow shares to sell to other investors, and they hope to short the stock to then buy back that same share at a cheaper price, and then they'd pocket the difference. For example, they borrow shares, they sell to you for $30, the stock price drops to $25, they then buy those shares to cover that position, and they've made $5 per share, and so they pocket the difference. And so when the stock price starts to go up on a stock with very high short interest, that means that the price that these hedge funds borrowed at is way higher now, which means that they're going to lose money, and so they try to get the price to come back down so they can cover at a lower price. Again, if you use the same example, they borrow shares, they sell to you for $30, but more and more people keep buying. Now the share price is at $40, so right now they're down $10 a share, and as a hedge fund, you have to make a decision to either cover your position now so you don't lose more money, or it could continue to go higher and you continue to lose money, or you cut your losses and you move on. And so with all of the short squeezes we've seen with GameStop, with AMC, it's the same process. These hedge funds get very nervous because they are scared that the price is going to keep going up. So they cover their position, and then once they cover their position, they're actually buying the shares, which again flips the share price even higher. And so that puts pressure on other hedge funds to do the same thing. And that's where you get the short squeeze, because once they have officially bought their shares to cover their borrowings, the price just gets added because there's more shares taken off of the market. And so today WorkHorse is down 11.65%. And I want to explain to you guys why the share price was down today, so it makes you understand why it's so important to hold your shares. So there are two ways to buy a stock. You either buy the common share itself, or you buy them through options. And so options have weekly contracts, they have monthly contracts, they have quarterly contracts. And so in an options market, you can control a lot more of the shares because every one contract consists of 100 shares. And so you essentially pay for a premium on this contract at whatever strike price you decide, and then you add the strike price and your premium price, and your stock has to hit that price by a certain date for you to break even. And so when there's options that expire every week, there's always a game being played. And so when we look at the history of WorkHorse this week, we saw the share price go crazy. And so if you're a hedge fund who continued to short WorkHorse when it was at $10, $11, you are borrowing shares at 10, somebody bought it at 10, and now you're hoping that the stock price goes down so you can cover at a lower position. But since the stock started to go up, hedge funds are starting to get nervous because those who borrowed at $10, the price is way higher than $10. So when it keeps going higher, they don't know what to do. So this is what brings me to market manipulation, short reports. You have analysts working together with the hedge funds. Today we had an analyst basically say WorkHorse is fairly valued, doesn't see any catalysts coming up that are going to help WorkHorse go up. And so in my belief, I believe these analysts work together with these hedge funds to try to get the price down, because this whole week we saw the price go up. I believe some hedge funds did not buy back the shares because they wanted to wait till Friday so they could get the price as low as they can to cut their losses in the most minimal fashion. And so when you continue to hold and you buy shares, you're putting pressure on these hedge funds because they can only wait so long. So if you buy and you hold and you never look at your position again, you're actually doing so much stress to these hedge funds, because every options contract that they decide to do, if they decide to short WorkHorse with an options contract expiring next week, next month, next year, and so there becomes a time frame that these hedge funds need the stock price to be at, whereas you as a shareholder who's just buying and holding has no stress because you are just holding. There's absolutely nothing to worry about. And that's why patience is the name of the game when you are trying to squeeze a stock. So for example, AMC, a lot of the hedge funds look like they gave up. People stopped shorting the stock because they knew people were buying, and so the price just continued to go up. And then when the price gets so high, common sense tells you to short the stock. And then as soon as you short it, it doubles up from there. And so that is why when you are squeezing, you can go from 60 to 100 to 200 to 500 to 1,000 very quickly, because there's a lot of money that decides to short at one point. But if people don't sell, then these guys have to cover their positions. And then once they do, they end up buying the shares. That makes the price even go higher. So when you're looking at WorkHorse, you don't be discouraged when you see the price go down. This is all part of the game. This is all a part of the hedge funds versus the retail investors. You just need to understand what is happening behind the scenes so you know how valuable it is to hold your shares. And so if we're looking at WorkHorse here on the daily time frame, I do want to mention there still is a gap to fill here at around $11.45. That would bring us back down to our 50 SMA. So don't be surprised if WorkHorse gets back to that level. At that point, we would love to see us bounce off this 50. We have yet to back test it, so that is the next move here on WorkHorse. So this squeeze is not going to happen overnight. Hedge funds don't just bet on one options contract. They have a ton of them. They have some that expire a year from now. They have some that expire today. They have some that expire next month. And so because there are so many different expiration dates, the best thing that you can do is just hold, put the pressure on them to make a decision, to cover their position, buy the stock, and then the stock eventually will go up. And so that is the beauty of the modern day. We have access to information that lets us know what stocks are being shorted, so it's easier for us then to fight against these hedge funds. But you need to understand the way to fight these guys is to buy and to hold. If you sell, you're helping them, and at that point you aren't going to see those larger returns. I've learned for myself that the short-term gains that you can get in a day off of a 100% run is very minuscule to the type of squeezes you can get later on. So as the price starts to get higher, the movements also start to get bigger when you are squeezing. And so that's the beauty of this type of stock. And so WorkHorse, I am still bullish on overall. I do expect this to squeeze if people decide to hold. If I'm looking at the accumulation over distribution, it did look like people were starting to take their profits here at this point. So that is a discouraging sign for me, but overall this gap does have to get filled. Weekly options did finish today, and so if we just look at our daily volume, we were down 11.65%, but on pretty low volume from what we've seen the last couple days. And so because today is a Friday, that lets me believe that there was some market manipulation in play today in favor of the hedge funds. That's also why the short report kind of came out today to scare people, because hedge funds actually dominate this game. There's a lot on the line for them. They have deals with other people, other big names. So at the end of the day, large money, smart money, big money wants the hedge funds to win, but they can lose at this game if retailers know how to play it. And so the way to play this is to buy and to hold. And so overall, I am not discouraged at all with the price action we saw with WorkHorse. It's actually playing into just how it should be. I have not sold a single share, and I don't plan on selling a single share anytime soon. Our RSI is starting to cool down, so let this kind of settle out on its 50 SMA. I would highly recommend accumulating at that level and then just holding your shares and putting the pressure on these big hedge funds, because this is an era and time in the market that I do think is going to go down in history as a monumental moment that changes how hedge funds invest, because there is such a large movement and a backing of people who are starting to understand this game. It is going to be harder for hedge funds to manipulate the retail investor moving forward, and I just think this is the time to be squeezing these hedge funds. And so overall, this was my quick little update on WorkHorse. If you guys enjoyed this update, don't forget to like. We are on the road to 10K subs, so if you made it to this point, feel free to hit that subscription button. This is Dummy Boy Finance. I'm Dummy Boy, and I'll see you guys in the next one.